Good morning. I hope you're doing well and welcome to today's edition of the London Session Open, or 600 seconds of trading as we also call it. We're going to take a look at the markets. It's 9:21 p.m. in London and the markets opened about an hour ago. So we're going to take a look and see what's going on with the main markets such as Euro, dollar, Bitcoin, gold, crude oil and the DAX 30. If you have any questions, just pop them here in the little chat box. As long as you have a YouTube account, you will be able to ask questions and interact with me. And my name is Alejandro Zambrano. I'm this guy over here, the chief market analyst with the TradeCaptain.com. Some of you guys might know me from Daily FX and FXCM. I used to be head of the London desk from, and I used to work for FXCM from 2009 up until 2016. If you are on Twitter, make sure you follow me at AlexFX00. That's a good way of receiving updates that I publish, like my update on silver here and more on the euro and other markets that I find interesting. One of the big things I discussed and shared with you guys last week is how I saw this head and shoulders in the China A50, which is index, the stock market index of the 50 Chinese stocks on the domestic market, and how we had a head and shoulders pattern in this market, how that would indicating a higher market move and how that could influence the S&P 500 in a positive way and the risk appetite in general. This has in essence propelled higher my long S&P 500 view, which I share with you guys here as well a few days ago. So there's a lot of content here on, here we go. Here's the S&P 500. First initial breakout was a few days ago, and then up and then down and continuing to move to the upside. So AlexFX00. Now what we're going to do now, as I said, we're just going to cover the markets. Before we actually look at the markets, I need to stress that trading financial markets, unfortunately, is risky. And there's a risk that will lose all of our invested money. As well, I'm going to conduct some live technical analysis. I'm going to share with you guys my view on the market, but it's made with an educational purpose and not to be viewed as buy and sell recommendations. Okay, let's kick off. And as soon as this loads, we're going to start, and we're going to start with the euro. So the euro, unfortunately, guys, is trading sideways, and it's just trading sideways between the June low and the July high. It is possible to potentially just work with 1853, which is this level up here, and this level here, but you can also reduce it, just work with the June low and June high. And in essence, we just need to look for a breakout, unless you happen to be someone that likes range-bound markets, because then maybe you're buying at the lows and selling at the highs and closing positions in the middle. But in my case, I'm a trend follower, and I don't have a well-functioning range-bound system to be able to trade range-bound markets. So when a market is range-bound like this one, I just ignore it. I did a little poll with you guys yesterday, and 37% of you guys thinks we're going to have a break this week. We do have the ECB rate meeting coming up on Thursday that could potentially trigger a move. Here is the last ECB rate meeting. At this time, they disappointed the market, and then the market declined with about 297 pip from the high to the low. They disappointed the market because the market was anticipating a minimal 10 basis point rate hike by summertime. They in essence ruled that out. However, though, since then, inflation in the euro area has increased to the 2% target, and it could be that they are slightly more hawkish. However, the ECB projected themselves that in the third quarter, inflation will be at 2%. So it's pretty much, inflation is where they anticipate it to be. So there's no real need for them to warn and say, well, get ready for rate hikes or get ready for more reduction of our QE because inflation is high. Because inflation is pretty much where they wanted it to be. The other part as well is that inflation is driven primarily by higher crude energy prices, something I shared with you guys many months ago when crude oil was heading to the upside. It's not because the unemployment rate is very low in Europe and you need to pay more money to hire somebody. Rather, it's because we have higher energy prices that inflation is high in Europe. So we might have a break. I personally think that at least 37% of you guys are a little bit optimistic. Fortunately, I think we need to clear August. So I think maybe within 5 weeks or something like that, we'll have a break. I'm not sure it's going to happen. I don't think it's going to happen this week, but we never know. So bullish, bearish. We'll take a look at the pound. We'll do that today. The pound, I was bearish on a break to 130.28. We took out the October and November lows of 2017 when we traded below these levels. We had an initial little decline, but then the market decided to push to the upside. And you can blame Donald Trump for that because it was his comments that caused the market to bounce all the way back up. Now, if you look at this and if you ask somebody that doesn't know too much about the markets and you're just going to ask them, which way is the pound dollar going? Well, pound dollar is trading to the downside, right? So most likely we'll continue to move to the downside, but I wouldn't trust this trend too much. And I think from a risk to reward ratio perspective, you probably need to wait for maybe a slightly more aggressive correction. So I'm happy to be bearish below 33.15. And it might potentially be possible to sell up here and then look for something like this. This is gonna give you an initial risk to reward ratio of you risk 126 pip to potentially make 243. So 243 over 116, I think it was 118. That's a risk to reward ratio of 2 times your risk. Bitcoin is doing really well. Look at this. It continues to move to the upside. The initial idea was buy here, profit around here. That played out fine. Going forward, we're dealing with an uptrend, and this is very typical, by the way. When one market like the euro goes quiet, you'll usually find another market that does well. So you just need to be on the lookout. And right now, it's Bitcoin. Not all other markets are doing very well, like Ethereum. It's just, last time I checked, was still trending sideways. But Bitcoin here is doing relatively well. We took out this, which was the June 3rd high. And when you take out a high like this one, the market will try to reach the next set of highs, which is this level here, which is the May 21st high. Okay. If you look at the 4 hour, this is the short term in the 4 hour. And always when we trade, we want to make sure that we make at least 2 times our risk. This is an old trick I used to use many years ago. You just change the figures to 33 and 66. When you do it like this, then the difference between the stop level and the target is split up into 3 equal boxes, like that. You can see, right? So the idea here is probably down here is the ideal entry if one is targeting the May 21st high. Why? Because you're going to risk 1 box to make potentially 2 boxes. So pretty much down here makes sense. We can also just load a normal simple Fibonacci. I just need to Alright, so I managed to do it, but I got like all the colors of the rainbow. which is not what I wanted. So simple fibs are these three levels. The 50% correction level is technically not a Fibonacci level, but in essence, pretty much down here is what it predicts. So yeah, I'm gonna stick to the idea that we want to remain bullish, and ideally, so this is the breakout level at 7,800. I am honestly not sure we're gonna go that low, but if we do go that low, I suspect traders gonna be quite keen on buying. And that will give us a relatively sort of decent risk to reward ratio. It's not going to be that optimal too, but it's definitely going to be enough, because if you're trading with the trend, what's going to happen is that indeed the market bottoms out here, then you're going to be able to reduce the stop loss. It goes from here to here to here. So in essence, at least in my case, yeah, I can always lower it, maybe 40% of the initial value. And that, if you think about it, if you always keep your profit targets, you don't try to change them, and then you always reduce your stop loss, then you will automatically get good risk reward ratios, because at the end of the day, it's about the average profit that needs to be about 2 times your average loss. Here's the price of West Texas crude oil, and you know, it's in an uptrend in the big picture. In the short term, you know, I turned bearish here, and the market is still creating these lower and lower highs, so there's absolutely no reason for us to buy down here at these levels right now. But if it bottoms out here, it could potentially bottom out and then head higher. What you want to keep an eye on is this. You see, we're creating these lower highs, and the most recent high is the 1719 level. And when we take one out, we're probably going to target the next high, so probably up, down, and then up. Finally, German DAX is soaring to the upside today. It's possible to trade, there's nothing wrong with this, but I don't like the fact that overall it's trading sideways, and there's high risk of being stopped out. Ideas I shared with you guys in the past that are working out all right is this, which is the S&P, which we looked at yesterday, if I remember correctly. I bought already here on the 12th, and my initial stop loss was at 27.71. We now just took out that level. I could probably put my stop loss down here. I'm long the Indian stock market as well. I'm doing quite well there. And then I'm actually short silver. Not everything I publish, or definitely not everything I trade. I think I just share maybe 20% of what I trade on Twitter, but at least gives you some indication of what I'm looking at and the style of trading I trade. So it's very good if you follow me on Twitter as well. We do have the Trade Captain Twitter, which is all of our content. So Nathan has been trading for, I think, 3 to 4 years for a hedge fund. He publishes a lot of short-term setups. He as well shares some longer-term views and things that he finds interesting. So check it out. And the Trade Captain handle is at tradecpt.com. Okay, let's just see if there's any questions. So there's no questions this morning, which is fine. A lot of you guys obviously just watched the recording. Don't forget to, even if you're watching the recording, you click on the button here, and then you hit that like button. It's really important that you do that if you like the presentation, because it helps it grow, and it's a bit like a trend. If I see something is growing and more people are enjoying it, I will do more of it. Whereas if I see that it's not getting too many likes, we're not getting retweets, and not getting too many views, then I'll do less of it. Very straightforward. So if you like it, support it. Have a good day, guys, and I'll see you guys tomorrow at 9 a.m. here at tradecapital.com. Thank you.